Ambarella stock, AMBA. This is a computer chip manufacturer that does a lot of cameras and stuff like that. Not to be confused with the American Mold Builders Association that builds plastic molds, um, because that's more likely what you're going to find if you search for AMBA. But Ambarella does video processing, image processing on chips, and computer vision, which is like object and edge detection kind of processing. So they have smart chips for mostly for cameras and security, motion detectors, things like that. And this is an interesting stock. Right now, it's buzzing a little bit. They have earnings coming out in 2 days, so everyone's kind of getting ready for what's going to happen with earnings. I don't know if people are scared or excited about earnings. So let's take a look at this from the fundamental side. They did a sort of a long bear, super volatile bear run, and then they switched 2019 into a super volatile bull run, and then of course the whole market came down. And this stock has done well. Let's look at the price. 70, a little bit bigger of a crash, I guess, than most of the chip companies probably. Yeah, so this is a little bit of a big crash and I guess a pretty standard bounce, and so roughly the same kind of shape as our general crash here. And yeah, all right. So I mean, this is what most of the market is kind of doing here. Did a little higher jump here above the moving average. So this looks like a really standard kind of move relative to the rest of the market, and it looks like it's following the market now. So their price to earnings were slightly on the bad side, but I mean everybody has bad price to earnings right now. And let's flip through the technicals on this. And so let's go to dailies. So it's kind of neutralized up in bull territory on the dailies. Yeah. Yeah, so not much indication on I mean, it's in bullish territory in general on the MACD and kind of neutralized. And then as we zoom in, it's getting to the bear side a little bit neutralized. So there's not, yeah, so all the bull side action is coming down, all the bear side action is trying to go up a little bit. So this is a really neutral MACD that's not giving much away here. And yeah, just like that move up to close that the general S&P got here. And yeah, so there's not a lot of giveaways or information on the MACD here. So yeah, the earnings are coming out on the 2nd, just in 2 days. So I'll put that in the description or pin it in the comments. And if you want me to come back and do like a big fundamental analysis episode on this same stock, let me know. I'll see if this video gets popular. I'll do a follow up on it. But yeah, as for right now, it's roughly following the market. It was on a decent bull run. I mean, this is not something like Zoom or something that's like ignoring the market crash and doing its own thing. Like its bull market run got completely interrupted, and it's following the regular market. So I think just kind of paying attention to the regular market is the way to go on this one right now. This is not investment advice. And so let me know if you want another video on this one, and then check out my playlists if you're looking for financial education videos or similar stocks to this, like tech stocks. I guess I'll put this on the tech playlist. And let's take a look at the general market to see what we have going on here, because I think we're gonna get some pre-market. Yeah. Oh, okay. Wow, this is crazy. All right, so so we had an insane blast up, like a blast up with a pennant, like in 1 hour, like reversed all the way back almost up to the peak here. So this was sort of looking like a megaphone shape. Um, it was looking like three taps kind of on a megaphone. You usually get a rejection out of here if it's bearish, or if it's bullish, you usually swing out of here. And we did this swing and then a reversal here, which is a really strange thing. And then we got a big bear pennant down into a reversal zone. And okay, so now we've gone up here and done a parabolic reversal and a flag here. Okay, so this is looking like a bear pennant right now on a reversal. And if this is a back test move, what is it back testing? Because it got all the way up here and broke this thing. This whole thing is just crazy looking, man. All right, so this is the 120-day moving average here, which just got knocked down a little bit actually by this pre-market move. It was up here prior, and okay, so I think that's going to move the bear target just down a little bit. This whole consolidation was right on the moving average and reversal up, and now this is looking like a bear flag to test the moving average again, which is going to be at a lower point, I guess, when it gets down there. And so this is the bull versus bear fight over this moving average. And the general idea with the long-term moving average is that, well, from this crash, it put us into bear market territory. Let me get out to like hourlies. So yeah, this long-term moving average here, and that is 120. Okay. So once we had our big crash here and we backtested the average here and dropped way down into bear territory here. So basically, if you're in a bear market, this moving average will keep the whole bear market to the downside, and breaking the average. If you're in a bear market, it's pretty hard to get above the average, and it usually gets rejected out pretty hard. But once you've broken it and gotten up here, it's a question of whether you're in a bear market at all anymore. And so that's where we are. We're in this really tricky zone where we don't know if this is a bear market anymore. And so, I mean, obviously the valuations and the fundamentals and things like Warren Buffett selling all his airlines and selling banks and stuff like that. And, like the XLF, the financials are way down in bear market territory. So there's a lot of fundamental indicators of a bear market. And obviously the massive crash here is a bear market indicator, which put us down into bear market territory. But but now, are we going to do the craziest reversal ever out into a bull market territory? Who knows? And yeah, so we got this crazy blast up here and no news really. And now this move down in the early sort of off market hours here is coming on the news of, well, I mean, Trump tweeted if people start looting, he's going to start shooting his own citizens. And they've started doing that with rubber bullets now. And they've started shooting protesters. They've started shooting. They started shooting. They started shooting reporters and journalists. They shot one of the journalists in the eye and blinded one of the journalists in her eye. So I think she's lost an eye, and they started enforcing the lockdowns in Minneapolis. And there are videos of like the National Guard rolling through with armored cars and shooting people on their own porch, like telling them to get in their house and shooting them with rubber bullets on the porch and stuff. So they're doing some crazy National Guard action right now, trying to stop the protests and trying to enforce curfews now in all the cities and try to stop rioting and looting from happening. So stuff is getting crazy. And so is this a reaction just to some crazy news, or is this just a fundamental spot we are in the market? And so now this is, well, let's flip through the action and see. Let's see what the momentum is telling us right now. Yeah, so we're still up in bull territory on the sort of the several month outlook here. And I guess it's pinching a little bit here, and that's not pinching nearly enough to be a bearish move. This is bull territory still. And then, oh, yeah, so look at this, uh, a reversal and another reversal. And now it's back down to a bearish. That's not quite a bearish move. That's not steep enough to be a bearish move yet. So it needs to diverge more than that and cross all the way down here onto the bearish side of the chart in order to be bearish. The blue line needs to pull down, and it needs to pull the red line all the way down here. And so this is not a bearish move yet, sort of on the weak outlook. And then let's get in and see. Yeah, not yet. No, this is kind of leveling off in bull territory, and it's kind of pulling it down. So it's not quite a bearish move. And this does look bearish here. So this, on the shorter term, the few day kind of outlook, we're down in bear territory and we're coming down. So if this crosses here, that would be a bearish look for a couple of days here because it's already in bear territory. So a crossover here would be a bear move in bear territory, which would be very bearish if that crosses over and pulls down there for the next couple of days. And then, yeah, so this looks like a bearish, immediate bearish move right now. So this looks like the bulls are fighting a bearish move and not getting up, and that just looks like a bear pennant. So I would expect this to get down and test our new moving average area here. And that's probably, well, we'll see if that plays out before open. I'll come back and check on this. Let's see if there's any other indicators that are going on. Yeah, man, this is so crazy. This is a completely weird behavior in this type of expanding wedge, this megaphone pattern. It did not do the bearish move, and it looked like it was trying to do the bullish move and completely rejected it. And now we have this double consolidation rejection here, which could be a reversal pattern. I was talking about that maybe being a reversal pattern on Friday, and then we got this super bullish blast up that broke the whole zone here, and it's just like, oh my goodness, what is this? So I wanted to point out a couple other shapes like this. Here before our big wave up, we got a similar, you see the break and the sort of the consolidation and a double one, right? And this has been a pretty sharp kind of pattern that we've seen a few times in this bull run. I mean, you get some weaker kind of W's along the way too. And this one kind of did like a grind and a reverse, but it didn't do like a parabolic reversal with a grind in between. But these kind of W's are generally kind of bearish shapes. They're usually called, if you're in a bull market, those kind of shapes are called bear traps. But we get one here too before this wave up. We get a dive and then a consolidation and a dive. And so it's not just like a double peak or a double bottom. It has to do this coiling kind of grinding thing to be like a really strong reversal action. And you can see this one shot a wave here, and this is sort of a weak looking W, weak wave here. And then this one didn't look that strong, but this one's wild, because it has this extra couple of moves on it, and ended up being a huge wave out of there. And so if this shape is is a coiling reversal-y shape here. That could be starting. I could be starting a wave to the downside. So I think let's just take a look at this thing and see if this bear pennant goes down and tests out this line again. And so the bulls are wanting to stay above this line, and this line, by the time we get down to it, it'll probably be slightly lower. And so if we do come down here, the bulls are looking for another kind of consolidation reversal out, and the bears don't even want to. They don't want to get stuck on this line. The bears want to break this thing and then back test it. And so that's kind of what we're looking for on Mondays to see if it breaks or if it gets stuck, and then what kind of crazy shape we're gonna get next. And so I don't know if this is a downside target because it didn't really do the normal megaphone shape. So I don't know if this is. I mean, I guess so. We still have this trend line, but this is not megaphone behavior here. This is craziness, and we're in this really really hot reaction zone where we've been reacting all over this long-term kind of moving average. So I think most people expect that we're still in a bear market. I don't know if that's the normal sentiment or not. I looked at the put call ratio. I can look at that again. And what's this one? S&P. Yeah. So this is the put call on the S&P. And so we're getting less puts now. So Friday, it's people started going short a little bit on Friday, but not actually short. Like when you're above this average, this is people actually being short the market. Like the general public is short. Right now, the general public is long and going slightly more long just at the moment. So people are not short the market at the moment. People are believing the run now. People have been trying to short this thing for a while. And let's see how far this goes back. So yeah, you can see that most of the activity is pretty close to the trend line, kind of just waving back and forth. And usually most of the activity is on the bullish side, and usually we're in a bull market. But now it looks like we're in a bear market, and we're getting a lot of crazy shorting action from time to time along this bull market or along this the bull run that may or may not be in a bear market at this point from the technical standpoint. You can't tell. Yeah, and then so some more shorts, and then no, now nobody's short. So we'll see. We'll see if people are trying to short this as we get into Monday and see what this bearish move actually looks like. And yeah, and this is the last 2 days, Friday, like Thursday night, and now over this weekend, we've actually had a bearish action overnight. And for the last several months, we have been getting relatively neutral action throughout the day trading and then getting all the bullish moves overnight. It just keeps doing bull moves overnight. And the last 2 days, we've gotten some bearish moves overnight, and the day trading has been neutral. So that's kind of interesting. Let's see. Yeah, so the Dow's going up. Oh, this doesn't have pre-market. Okay, so these aren't going to be too interesting because there's not any pre-market on these yet. But we'll just take a look at a couple of things here. Yeah, so the VIX, so that super bullish move on close shoved the VIX down, but I'm sure that bearish move is going to put it right back and into the hot zone here. And so this is dangerous territory on the VIX. I mean, this is safe territory on the VIX down here, 20, maybe 15, 20. And up here, kind of broke up to the 25 range. We're, up almost at 30 on the VIX. 30 is a dangerous market. That's a bear market indicator, or just a volatility indicator of bigger kind of swings. And really, the VIX itself getting choppier is vol of vol. Like the volatility of the volatility is more of a downside risk, sort of not necessarily a bear market indicator, but just a risk indicator. It's just risky. So yeah, so this is still uh, capable of being pretty volatile and capable of some downside risk as far as the VIX is concerned. Oil is trying to do a push up. Financials. Oh, financials came down. Oh, interesting. Okay. So that's probably going to look bearish on the financials. If we get a bull move or a bearish move to open here, that should uh, come down a little bit on the financials. And so this might be like an intermediate kind of peak on the financials here. And these financials, oh yeah, that's weird. When I look on the hourly, it completely breaks it. It goes from September 19 into March of 20. I don't know why it does that. The financial chart is screwed up. But if I go to the dailies, it shows the actual chart. So I mean, on the financials, it's nowhere near bull territory. Like the financials are very bearish still. They're down here, and a pretty aggressive move up. It's already been rejected, and it looks like the S&P is coming down. Um, so that looks bearish. Oh, the small caps made it all the way up, testing bull territory. Okay, pretty interesting. And then Tesla has been doing some crazy stuff. So this here, the last time I looked at Tesla, I was thinking this could be possibly a consolidation wedge area that was hot, and it got a rejection, but then it's come back up into here. So I don't know if this is a wet. I mean, it's still right along this downtrend line. Tesla's in a weird spot. So if Tesla, yeah, Tesla needs to figure out what it's doing. It's still in this little zone here. And this looks like a tight little coil, which could get a big move on Tesla. And so if it gets out of here, it'll probably backtest. So if it breaks out and backtests again, that could be a spot for a bear move. Or if it just gets out of here, and gets above this line, that could be a very bullish breakout. So this is a spot to just kind of watch Tesla for a breakout indicator in either direction. And it's just kind of still in here. I mean, I guess if we get in on maybe like an hourly chart, we can see some more action. Yeah, so it's done. I like to draw these trend lines kind of through the rough edges of the zone. And so, oh, whoops. Oh. So potentially wiggle this down trend line a little bit to get all this grinding action here. Like that maybe. And like that. And yeah, so it looks like maybe it is making a bullish break right now. And so, yeah, so we'll see about that because it looked like it was trying to make a bearish break here and it got rejected. And so if the S&P is coming down hard, we'll see if the S&P is related to this move. We don't have pre-market on this stuff yet. But in general, the S&P has been doing crazy stuff, and Tesla has just been chilling out in this flat spot the whole time. So that's a really interesting thing to see. Kind of, industrial tech sector ignoring, kind of not doing the same patterns at all as the S&P is doing, and just kind of chilling. Potential bullish breakout here. Let's see if the S&P does come down bearish. Let's see if Tesla does it, and then yeah, silver's up, which I mean could be an inflation indicator. If silver actually stays up and starts going bullish, that could be an inflation indicator. And then gold I have the PHYS. That's the Sprott Gold Fund because GLD's custodian is HSBC, and that is a basically not bankrupt, but I mean a international bank with a really bad balance sheet that's also has a bunch of operations in Hong Kong. So yeah, there's huge riots in Hong Kong. The Chinese police are firing tear gas and arresting people, and now um, they're threatening to pass a law to extradite people out of Hong Kong to mainland China. And it looks like the goal is to overtake Hong Kong and then just try to get the money flow that's coming into Hong Kong into mainland China. I don't know if that works or exactly the goal with Hong Kong. Um, but I think yeah, China just doesn't see any value in Hong Kong being a separate state, and they're trying to take it back. And it looks like they're not being contested on Hong Kong. It looks like they're going to take it back. And now UK and well, really just UK is trying to sort of defend Taiwan now. And America is all up in the South China Sea with a bunch of warships. And Australia is giving moral support to Hong Kong and Taiwan and stuff like that. Um, but yeah, China is sort of threatening Taiwan now, and they've already basically taken Hong Kong back. And so it's some tense stuff with China right now on the international stage, and we have protests and riots in cities all over the whole world right now, and especially this weekend, America has gone wild. They've deployed the National Guard, and the last time I checked, it was 14 states. But I mean, it could be more than that by the time we get to the market opening. So the governors of I think 12 states, and I don't know if there's a governor in DC, but usually the governors will activate the National Guard. But the Defense Act of 2007 gives the president the authority uh, to activate the National Guard in a state where the governor doesn't request it. The federal government can actually deploy troops to a state that's not requesting them legally, and also activate military police from the military bases. And so we'll see if more governors call them in, or if Trump calls more National Guard in. But yeah, it looks like craziness, and yeah, I don't know. Yeah, I don't know if this is just a reaction to the news. It'll be interesting to see what this does. But a parabolic reversal like that definitely looks more bearish to me, and we are still up in bull territory. So this is just a bearish move in bull territory for right now, and we'll have to see what kind of mess we get here, and that might play out before open, and we might be able to get an actual look at this thing um, before we get going. But that looks like that looks like kind of the trend on most of the charts right now, except for Tesla is kind of on a bull move in general, and just like a little pop up. But everything else looks to be making a bearish move just to open. And yeah, this line is super important. If the bears can break this thing and back test it, that could be a whole wave of stuff. But staying above this thing is critical. And also this has been a really uh, intense trend line where you get, and this is the financial crisis. This is a 12-year bull market line that supported the entire 12-year bull run. So we've broken underneath that thing, which is super bearish if you back test it and break down. But we didn't do that. We went and tested the top and got up above the moving average. So really the bears have two huge targets that they're going to have to break to get actually bearish on the whole market again. And so probably need to backtest this thing and get down, and then have to break this thing and backtest it. And I wouldn't imagine that happens like right now in 2 days. I think this is just going to be a mess for a little while, and uh, and those are the bear targets. And then the bulls don't really have targets. The bulls just want to get probably above here, somewhere above here, like up here and kind of back test. And then if the bulls can get up here in this zone, 31, 32, and kind of back test and go up, that would be a super bull market indicator, like actual bull market territory. Like we reversed completely out of this thing into a bull market. And that would probably be a high inflation indicator, and that would probably be good for stocks and silver in that case, as what I would think would do good in those conditions. And kind of if we break down here, that would be more of a look at gold probably doing okay, and treasuries and dollars kind of as longs that way. And I guess on the, yeah, I mean, on the inflation and deflation debate, um, I think everyone pretty much agrees that, dollars will be losing value relative to like food or something like that. So it's inflation of the dollar, but a lot of people also expect the foreign currencies to be inflating more than the US currency, because the US currency is the standard for all the world currencies. It's like the US dollar backing of all the other world currencies. So it's just way easier for the other countries to inflate their currency if they want to than it is for the US, because like 70% of the entire world monetary system is US dollars. So like the amount of US dollars that the Fed would have to print relative to another little country, like if somebody else wants to inflate, there's no way the Fed can keep up with them, basically. So as far as FX kind of trades go, like maybe Brazil or South Africa, Canada, Australia, like commodity currency countries that want to lower their currency in order to trade. Like if they inflate, that makes their debt cheaper and it makes their commodities easier to sell. And so that's kind of the deflationary scenario where other countries inflate more than the dollar and they're getting the commodity prices down to where they can sell them easily and pay off their debt. And then you have a lot of countries sort of all inflating and competing for lower commodity prices to pay off the debt. And so that's the deflationary scenario that America will have a tough time battling, but America has helicopter money now that they can use to get inflation, and they can skip the financial system and put money directly into accounts and try to get people to spend it. And so this is kind of the inflation deflation debate or battle. Other countries against the dollar, kind of who can inflate more. And so deflation does not, that deflationary scenario does not mean that the dollar is gaining value. Like dollar will be losing value to like food and stuff like that domestically in the US. But it's just that other currencies fall more and other commodities might also fall more than the dollar. And that whole outlook is very bearish for the rest of the world, and it's really complicated for the US and the US stock market, because the US stock market's in dollars and dollars are the backing, of all the other currencies. Yeah, so this is just really complicated. But gold looks like it would do pretty well in either scenario, if it's actually inflationary or if it's the internationally deflationary scenario. It looks like gold is not a commodity asset; it's just a monetary asset that's not inflationary. So that should be good. That should be a good insurance asset. And silver, if if commodities are deflationary, that should be downward pressure on silver. So we're seeing silver pop right now, which is an interesting look. And let's look at the DXY. Yeah, okay, so the DXY is pushing down. So this is a really interesting look. And the last time that we had the DXY push down here was during the crash, and it didn't make it down to the bottom of the crash. The S&P crash kind of made it down to this area sometime around here. So the U.S. blew their balance sheet up during the crash, trying to fight against it and create liquidity for the banks and keep the banks functional because the banks were just freezing up and they weren't functioning. The repo market wasn't functioning. So this is all a bunch of liquidity to get the repo market functioning, to get banks functional. And then this move up was all the other countries going like, holy crap, the dollar's getting strong and it's like crushing our currencies. And so the other countries all responded, and this is largely the euro, and you're looking at the DXY, but this happened on most of all the FX pairs as they responded to the big Fed print with a bigger response. And so I think that pattern is very much possible. If we get another kind of liquidity move down, the Fed could be printing to fight against that. And then potentially before we get to the bottom, it could be a leading indicator. If this thing starts screaming back up as the rest of the world prints money in response to the Fed making the dollar go this way. So this is the dollar weakening as the Fed prints, and then the other countries make the dollar stronger, which is bad. It's bad for just about everybody if the dollar gets stronger, but it allows the other countries to kind of inflate their debt. So in the yeah, oh man, it's gonna be so complicated. Okay, yeah, I'm trying to think about it a little bit here. So we had this kind of consolidation zone here, and this is a breakout of the zone. So this looks like a move down that the dollar's trying to do, which is interesting, and should probably get another reaction from everyone else printing at some point. Probably not that deep. Like I don't know where a good target would be. Like maybe around here somewhere, 96 or something. And then, yeah, I think like Raoul Pal and Brent Johnson, I think have a really good kind of thesis on this. I mean, Brent Johnson has the dollar milkshake theory. Just basically, it's just a dollar crunch. Like there's less dollar loans available, and there's a ton of dollar loan debt that has to be paid right now. And you have this kind of depressionary scenario across the rest of the world where the velocity of money keeps going down. People aren't spending money and they're hoarding dollars and trying to pay the loans. And so that's kind of how you get into the deflationary scenario when other countries have to print to get more dollars to pay the loans, and they're trying to get the commodity countries are trying to get their commodity prices down so they can, export to get dollars to pay the loans. And so America tries to get the dollar down, but everyone else is going to react and probably push it back up. So that's kind of the fight, the money printing fight. And so, yeah, you can have sort of American commodities like food or something going up, but you can have international commodities like, who knows, oil or coal or something getting pushed down. And man, it's really complicated, and it's hard to find it's just really hard to find a stable kind of portfolio allocation because we don't even know if it's a bull or a bear market yet. We don't have indicators that are really pointing at inflation or deflation. I mean, we have silver going up, we have the DXY going down. Yeah, so it looks like a little inflationary push right now on the US's end. But the last time that we got a good inflationary push was during a liquidity down move, and so we'll have to see what the bank kind of stuff looks like for the U.S. So the interest rates for the U.S. are key. They're really key to kind of looking at the inflation scenario. if the Fed has announced that they don't want negative interest rates, and they say stuff like that all the time, but they really don't have that much control over them. If the bonds trade higher, it's gonna put downward pressure on the interest rates, and the Fed can say they're above zero, and they'll just say like they announce they're above zero, but at some point they'll just be like, oh no, emergency rate cut down to this level, where it's actually trading, and that's just kind of how the interest rates move. Like the Fed tries to announce and lock it at a level, but they really don't have that much control. And when it trades up, they like it, and they'll be like, "Oh, it's trading up," so they'll be like, "Okay, we're going to be raising rates for a while now." And then when it stops trading up, they're like, "Okay, we're going to hold the rates here for a while," and then it starts trading down, and they're like, okay, emergency rate cut down to this level, and it doesn't happen at a normal time interval. On the way down, they're like, oh crap, like rate cut, and so um, that's a huge thing to look out for. The Fed is going to be like, no, we're holding the rates here. That's what they're going to do, and we'll see if the rates actually go down or not from here. And if they go into negative territory, then that's pretty bearish. And if they go into positive territory, that's an inflation signal. And if it starts running away into positive territory, that's a high inflation signal. And so that is a way different market condition. If we get high inflation, um, silver looks killer, and most likely stocks will be shooting up unless it's high inflation of a complete dollar collapse, in which there's a possibility that inflation goes up and equities actually go down at the same time, like we saw with the Dutch Empire and the Guilder, like with the Dutch East India Company. Um, that is possible actually. So just keeping an eye on the interest rates is really important. They're close to zero now, and they're saying they'll stay at zero, and they may do that. In which case, it doesn't really tell us much of anything. But if they push negative, that's a big deflationary international signal. A lot of the other countries have already pushed to negative. England just went to negative bonds, and uh, and so that's the big macro outlook and some little tech stuff that's going on right now. And so let's see how this little bearish move plays out in the early market on Monday. And so this is not investment advice. And please check out my playlists. And yeah, let me know uh, if you want a follow up on this stock. I can just put it in the description. If this video does not get that many hits, I'll just put the kind of the balance sheet update and stuff in the video description, so you can check it out there. Um, but if this video gets big, I'll do a whole nother video. And yeah, so that is the deal here with our aftermarket S&P action and the whole crazy worldwide depression with riots and military lockdowns and warships now going on, and yeah, it's tough, man. Yeah, people don't have money. It's a big dollar squeeze. Other countries don't have money. People can't get the dollars they need to pay loans, and and this is what the Fed is working on now, is just trying to sort of, the banks aren't loaning money, and the banks are not making money. The whole banking model, it looks messy. Warren Buffett's selling banks. It looks crazy right now. But the Fed is sort of just skipping past the banks with all these four-letter word programs and just trying to get money to people that can't get the money. And they have dollar swap lines they're setting up with other countries, where other countries can just directly trade their currency to the Fed. The Fed is just going to hold other countries' currencies and just give them dollars. So, like the friendly countries with Americans that get a positive swap line, um, like Japan and England and Mexico and stuff like that, um, can get the dollars they need. They can just print their dollars, and the Fed will hold their money and just give them dollars. And then countries like China that the Fed's refusing to give a swap line to is in a huge dollar crunch right now. And so um, that's kind of how the U.S. is. The next step of like sanctions is kind of they're using swap lines, sort of like they've been using sanctions. So with the sanctions, the Fed, like everybody has to transfer money with SWIFT, with like the US dollar transfer system. Every time they make international trades, like the oil is all priced in dollars and people trade dollars internationally and they have to trade it through the American banking system. And so America can just, like when they put sanctions on Russia or something like that, can just limit their ability to transfer dollars around and it really jams the country up. And so that's what US has been doing, putting sanctions, on like Venezuela, on Russia, and stuff like that, to try to get them to do whatever international policies they're trying to get, you know, enacted. But now that there's a big dollar squeeze, these dollar swap lines are a new thing that's similar to sanctions that they're doing. And so I guess looking at Marin Katusa, he's talking about these swap lines are really important looking at mining jurisdictions for different commodities and silver and gold. Uh, if you have if you have your mining, like American mining companies or something like that, in countries that have negative swap lines, there's new political risk of those countries nationalizing the commodity mines if they can't get dollar swap lines and they can't pay the loans and all that sort of stuff. Um, yeah, there's risk of countries nationalizing mines and trying to inflate and trying to move commodities at lower prices and all of that stuff. So yeah, so there's tons of new political risk popping up, and now there's domestic, I mean, domestic, whatever you call it, martial law, sort of, not officially martial law yet, but um, that's happening in a lot of countries. The National Guard or the equivalent of the National Guard in a bunch of countries in Europe and Australia is moving around, and um, it's a worldwide depression right now, and it's a depression on dollars, and people don't have enough dollars to pay their debts. And so in America, the Fed can print dollars, and so America has a lot of control over sort of its own debt and countries that it wants to help with the debt. And that's kind of the situation where it's really hard to predict what the dollar is exactly going to do because the Fed has a lot of control over what happens with the dollar and who they give it to. And so, yeah, we'll see if there's a bunch of helicopter money. And helicopter money would be a fight against deflationary scenario, or uh, if the interest rates start going up, they're not going to be doing helicopter money. They're going to be trying to stop the interest rates from going up, and they'll try to reduce inflation. But um, yeah, that's the big thing to watch. Just the interest rates, and never listen to the Fed what they say they want the interest rates to be. You have to look at the bond trading. The interest rates are a result of the GDP and the inflation, and that's how the bonds trade, and that's what pushes the interest rates up and down. And the Fed kind of fights against it and tries to announce where they want it to go, but the market will trade away from there, and then the Fed will be like, okay, now it's over here. But that's pretty much, yeah. All right, that's way more than I. Yeah, that's good. All right, happy trading.